So last week we were here, we closed here, and we expected Nifty to head higher towards 19,400, 500. So 1, 2, 3, 4, we hit 19,500. The high was 19,523, and now looks to have started a pullback. So welcome to Billionaire. It's 9th of July 2023. I'll be explaining the Nifty's move for the next week. Stay tuned, and we'll first talk about price action indicators, and then we'll check Elliott Wave. So before that, let's discuss what we discussed in a last week's summary. So last week's summary was this. So if Nifty opens a gap up, then likely to hit 19,254, then 370. So Nifty did open gap up on this day, right? So on this day, it opened a gap up exactly near, what is this? 246. Okay, it opened 19,246, and then on that day, it made high of 19,345. Then subsequently it went towards 19,500. So this is what we were discussing. This is what we said in a last week, right? 19,400, 500 levels will be touched. And on the larger degree, we are expecting 19,672 to 740 level. Okay, so all these things we'll discuss again. So let's first talk about price action and indicators. So this week's update will be quick, as I do have the map in my mind that how the Nifty will be moving with the Elliott Wave. But with price action and indicators, it's clear that this candle, so from here onwards, if you can see, entirely towards bullish, we never closed below one of the previous candles. So how many sessions are these? 3, 3, 6, 7, 8. So in 8 sessions, we were completely bullish. Every day we were closing higher, or at least closing near the opening or above the opening. And here you can see it has broken the low of previous day candle and then closed below this candle. So this could be a temporary pause in the uptrend, and yeah, there is no meaning to this trend line. It was drawn for previous view and it's not useful anymore. So you can see here Nifty is fully bullish. This is 200 EMA, this is 100 EMA, this is 48 EMA, and this is 13 EMA. It's trading well above all these moving averages. RSI is just cooling off from overbought zones, and then this is Aron indicator, which is still showing the extreme bullish zones. So since this particular point, we are in a completely bullish market as per the Aron indicator. So here we could be coming towards 13 EMA, and then again we could bounce back on the upside. So this is what we can expect on the downside: 19,125 or somewhere near 19,000, let's say 200 or 170 odd levels, because this moving average is bound to go slowly up as well. The price starts coming down, and that it spends a lot of time there, then it won't go much up, but some points around 50 points it can move up or down, depends on the price movement. But yeah, take or like you can expect 19,200 to 100 levels on the downside that Nifty can test, as it has broken one of the previous days low. So that's all on the price action indicators. And now we'll check the Elliott Wave. So Elliott Wave is pretty simple. So this was the chart that we discussed in the last week, and here we were expecting Nifty to head higher towards 19,672, which is 100% extension of this A wave. So this A wave, entire A wave, and this is B wave, and this is wave C, right? So wave C would go 100% of wave A. So that's why 19,672 is coming in. And here there is one more level here, which we are considering 19,740. Between these, we could end the C wave, then there could be another correction on the downside. So why we are saying here ABC instead of impulse waves? There is a reason for that, and this is the chart for that, right? So this is the chart we are considering. Nifty is moving in 3-3 wave structure, and it could be making leading diagonal or ending diagonal structure. So this is A wave, B, C. Then we had a correction, WXY, double zigzag. Then now we'll have A, B, and wave C. This will complete this third wave. Then again we'll go in consolidation or on dip on the downside, and then again we will go on the upside. So downside level we can find out once we make a top. So 3-4 days continuous selling will tell us that the top has been made and third wave has started. So 3-4 days continuous bearish candles with big volume, or you could say 2-3 bearish Marubozus should tell us that the fourth wave could be starting, and then we'll have fifth wave again heading on the upside. So don't worry, long-term trend should be bullish itself, but for now we should be looking to find the top in the wave C, and right now 1 or 2 weeks more left until we complete the third wave. So that's this is what we are thinking, right? Yeah, this was the last week's chart. There we mentioned that this is the fifth wave of C wave, and here we completed wave 1. This is 2, and we were in the third wave, third, fourth, and fifth. Like this we are going in. So 3, and then fourth wave correction, and then fifth wave will head towards these levels that we mentioned, 670 and 740. So yeah, once this is complete, we will have a pullback on the downside. So currently we are in a fourth wave. So this is the chart from last week again, 2nd July. There we mentioned that we are in third wave, and third wave could head towards 19,400 to 500 levels. So 500 also was whole number. That's what we mentioned. There we could face resistance, and the top has been made at 19,523. So this is our top, right? So from here we started a pullback and broken below previous day low, broken and closed below previous day low. So we can assume that the fourth wave has started, because on let me show you a different chart now. So you can see here continuous red candles on hourly chart, right? So this also signals that the pullback of fourth wave, this fourth wave could be in progress. That's what we talked, right? So once this is completed, and usually it completes at 0.32 Fibonacci of this entire rally. So this third wave, this is the third wave's high and low, right? So hope it's clear. This is the third wave start, and this is the end of third wave. So when you plot Fibonacci on these, you get 0.236 and 0.32 Fibonacci as these numbers. So 19,187 is the number that this 0.32 Fibonacci is suggesting. This is the static number. It won't change like moving average, and the price is likely to retrace toward this. That's what we are assuming. So somewhere near this, it can make low, and then again it will head for fifth wave. So this might take a lot of time, or even it might take entire week to complete these waves, because this is fourth wave and it is expected to be very slow. So that's why be careful trading next week. It's not good to trade on the long side or short side. It will be purely sellers game for the next week, because volatility has little bit of increase due to one red candle. So now they will start to pull it up as B wave, and then the C wave will come. So next 1 or 2 weeks, even 2 weeks, it can consolidate, but I'm not expecting 2 weeks. At least a week's consolidation is possible, and then we can have the fifth wave. So be ready for this. Then let's check this portion in detail, what's happening there. So when you check that, you can see here that this move is looking like a 3-wave A wave. Okay, usually fourth waves are flat or triangles, or even a complex correction. So in flat, you will have A wave here. Okay, you will have B wave going deep, more than 0.600 Fibonacci, and it could even go 90%. So these are the levels that we need to watch for on the upside. So 475 to 500 levels it can touch in a B wave, and this B wave can be very slow. It can make a channel like this, go slow up like this, okay, and then could give a break on the downside. So currently we might have finished A wave. So to Monday's opening will tell us, and B wave is in progress. B wave will be slow up again. It will be in a 3-wave. So B wave will complete like this. Then we'll have C wave on the downside. So this is one way. There can be a way that B wave can just break the top of this. Okay, this B wave can even go a little higher and then correct on the downside. So there is a possibility of expanded flatter correction as well. So to know whether it, like after breaking, it will fail on the downside or not, we really need to see a negative divergence between these points. So this 0 and this B waves end, there should be a negative divergence. So MACD should go down and price should go up, and this move should be 3-wave on the upside. And then we can have one more move down as wave C heading towards 19,187. So this is the second way it can go down, and there are other ways as well. It will go like this, ABC, right? So it could be zigzag, it can even face rejection here, and then it can form a triangle as well. So which will be very tough to trade. So it will form triangle like this, and then it can shoot higher, right? For the fifth wave. So complicated case, the fourth wave will be very tough to trade. So depending on how much time it takes and what pattern it forms, we have to look for end of fourth wave and ride the fifth wave. Only hedging strategies will work, or even you can just do the scalping. So in case it opens gap up next session above, let's say 17,000, sorry, 19,000. 375, right? 375 to 380 zones. So watch out this area. So this area will also act as a resistance. So if the Nifty opens even small gap up and breaks this zone, then assume that it will even go 100 more points on the upside, 100 to 130 points on the upside. It has a potential to go up, and then we can have a correction. So be ready. Around these zones, around again 19,500 will act as a resistance when we are in a B wave. So this is the structure that I'm looking at for the next week. So that's all on this Elliott Wave analysis. So hope you like the analysis. If you have any doubts, add into the comments, and you can read the summary now. Hope it's very clear. We are very happy to help you for any of the doubts. So do make sure to like and subscribe, because this takes a lot of effort, and I'm recording this video at around 1:15 a.m. in the morning. So hope you understand and like and subscribe the video. Thanks for watching. Bye-bye.